Types of taxation. We can classify taxes in three different ways. Taxation can be either direct or indirect, progressive, regressive, or proportional, and it can be levied on income or expenditure. To comprehend these concepts, we must first understand the terms impact and incidence. Impact of a tax refers to whether tax is levied or collected. A tax will impact either the household or the firm. The incidence of a tax concerns whom the burden of the tax falls upon. This simply means who pays the tax, the household or the firm. Using this above knowledge, we can determine whether the tax is direct or indirect. Direct taxation occurs when the tax is collected directly from the taxpayer's income. This can be either the individual or a company. In this situation, both the impact and the incidence fall on the same person. Personal income tax and company taxes are examples of direct taxation. Indirect taxation is collected from the taxpayer's expenditure. Here it can be said that the impact and the incidence fall upon different people. The Goods and Services Tax, or GST, is an example of this situation. Generally, the impact of indirect taxation will fall on the seller, whilst the incidence will fall on the consumer, as this tax can be seen as production costs and consequently passed on through the consumer through a price rise. Taxes are levied in different ways across society. They are proportionally levied, regressively, or progressively levied. Progressive taxation sees the rate of tax as a percentage of income rise as income rises. Here, the majority of the burden is placed upon the higher income earners. It, therefore, can be seen as a method of achieving greater income equality. This graph illustrates the concept. It is important to note, however, that in the reality, the tax rate as a proportion of income is not quite so simple. However, the concept remains the same, and those higher income earners will face greater tax rates. In Australia, high income taxes are levied in a proportional manner, using a system of tax brackets to allocate the rates. Proportional taxation allows the same tax rates to all levels of the income. In other words, every taxpayer will be taxed the same proportion of their income, no matter how much they earn. Company tax in Australia is an example of proportional tax system currently in place. The current rate of taxes companies at 30% of their profits, with this figure due to fall to 29% of their profits in 2013. A proportional taxation system shares the burden of the tax evenly across all society classes. This graph illustrates this. A regressive taxation system sees the rate of tax fall at each level of income and therefore places a much greater burden on the lower income earners. This graph illustrates this. Excise tax levied on goods and services at a flat rate, such as those on alcohol and tobacco, is such an example of regressive tax. Whilst the consumer pays the same amount of tax, it represents a greater proportion of income for lower tax earners.